Our discussion here this morning is to look at insurance disruption. Is it here, or are we still waiting? Really what we're hoping to deliver is a conversation that'll cut through all the noise and really start analyzing the current position of the general market and give you a realistic outlook of what's really taking place, given how close we are to activities within at least the local market space. We'll be outlining the threats and opportunities within the industry and have a look at some key digital technological developments that you should watch out for. Investment in InsurTech seems to point towards the fact that most investment is in fact going towards startups that are enabling rather than disrupting the insurance industry. To give you an idea, McKinsey estimates that about 61% of the startups participating in this space are actually enabling the value chain, while 30% are disintermediating customers from incumbents, and only 9% are estimated to be disrupting the value chain. Now, Toby and Eric, I'd like you to please introduce yourselves and comment on whether you believe there's sufficient evidence to point towards the fact that the industry is being disrupted.
Certainly. So, my name is Bo-Erik Abrahamsson. I'm the founder and CEO of digital Fineprint. We help insurance companies find new risks, especially on small business insurance, by analyzing open data, so review data, social data, government data, and these kind of things. Then we sell those insights to insurance companies. So on a question of disruption, we also have to define the terms first. Before starting this company, I used to work at Twitter, and the Silicon Valley model of disruption is actually pretty quantified. They say that you need to deliver a 10x quantifiable difference from the existing status quo in the industry for it to be truly disruptive. And in insurance, I think that's where we have an opportunity to do so, because frankly, insurance is so far behind when it comes to IT. That's where we're trying to help them, and we're trying to give them more tools, more analytics. When I was looking at which industry to enter, Fintech had basically already happened. It's been 10 years in the making. But in 2016, when we got started, insurance was the next big thing. There's a big gap between the potential of the insurance industry as a force for good, because the right tools, analytics, software isn't out there. So that's why I started this company, to be growing it and create disruption. In one example, we did cut the customer acquisition cost for an insurance company by 80%. So we did 5x, but we want to get to 10x and much more disruption than that.
Fantastic. Good morning, I'm Tobias Taupitz, the founder and CEO of Laka. I guess we are neatly split between the B2B and B2C side. We are on the B2C side, and we offer crowd insurance powered by the community. Now that's a new term we coined, and it establishes a new business model where we charge in arrears at the end of the month. I come from the corporate finance side of things. I spent some time with Barclays and the investment bank, covering insurance and Fintech at the same time. And at some point, the two worlds would come together, and I started asking some silly questions that led me to found Laka. Laka, by the way, is the Hawaiian goddess of prosperity and hula dancing. Look forward to having a little company dance audition with you later at the coffee bar, potentially. But what Laka really does is, if you look in the insurance space, it's a fantastic business model if you are the insurer, right? You take premiums up front, you pay, make interest income down the line, and you might pay out for claims eventually. Brilliant for the insurer, not so good for the customer. You have to pay first to retrieve a service eventually. So what we do is we flip that on its head by not charging premiums up front any longer. We charge at the end of the month based on the true cost of claims in a group of like-minded people, a risk pool, so to speak. And that only until a clearly defined cap. So our value proposition is really, we give you a maximum price on our platform, let's call it £20 in a month. And from here on, it's only upside. The worst possible price is 20. But if you play along and take better care and fewer claims happen, you pay much less. So we take out a lot of the inefficiencies and the cost in the industry, the high margins. And year to date, the last 6 months, we have saved an average customer on our platform £97 and more to come. So I guess we are a good case study of what's happening in the ecosystem. There's much more, and I guess there's one bottom line, the customer will win. That's my personal opinion.
Thank you both. one of the things we observe based on conversations that we have our partners from having run Startupbootcamp and InsurTech over the last 3 years is the one thing that pains insurers is the fact that insurance is sold rather than bought. So from your respective perspectives, what are the threats and opportunities that exist in terms of either making it attractive on one hand to enter the market and really disrupt it, to really start delivering some of this 10x value, and on the other hand, what are the constraints? What makes it difficult? One could point to things like capital, regulation, which is quite different from perhaps constraints or opportunities that might pertain in other industries that we've seen being disrupted.
So B2C insurance is incredibly hard because of the regulatory requirements, which are there to protect the customers, which makes a lot of sense. I think it takes a little bit longer to make a first pound of revenue, and you have to overcome a couple of hurdles. Luckily, the London in Fintech and InsurTech space has a tremendous ecosystem. We were part of the very Startupbootcamp InsurTech program to get us going. We were part of the FCA Sandbox and graduated from it. The Sandbox, as you will know, is an initiative to test new business models. You find a way around the existing world, of course, within a very confined space. That's not a magic box, but they help you get going. So I think there's a lot of support out there. The hurdles are high, but I feel at the same time, insurance is one of the last resorts that has not been tremendously disrupted or changed or innovated. So I think it's a big, big opportunity. And again, the customer will win with a lot of different choices, alternatives. I think incumbents will need to get on the forefront of this, improve the customer journey. The prices will be even more competitive than we've seen with the price comparison websites appearing. And again, I think it will be a positive, a luxurious problem for the customer to choose the right product, because there will be many, many more niche products like ours, for instance, to begin with.
I think a key trend we start seeing is disintermediation. Insurance as an industry is extremely barriered. You start with an insurance company that sells to a broker, they might use an agency that then sells to consumer, but that's not the whole story. They also have a reinsurance company that's underwriting insurance. It's almost 5 steps. In every part of that chain, somebody needs to make a profit. So you might add 10% of profit and the customer has to pay for it. That's going to disappear. I don't think there's a single industry in the world that's going to survive with 5 layers of disintermediation. So smart insurance companies like Hiscox is now selling SME insurance direct to the customer, underwriting it themselves, and we're helping them doing that. Munich Re is going to do amazing things, helping MGA sell direct to consumer to go directly from the reinsurance stage down to the customer. At each stage, in order to make the sell happen, you need analytics, you need software. So we see ourselves as a seller of shovels, not seller of gold, so to say. And we help the insurance companies help to disrupt themselves and enable them to do better business and help their customers more.
And I guess to add to that, I think the layers is an important thing to mention. And I think it's quite an interesting process. InsurTech is a very new phenomenon. It trades Fintech by 5 years. We see more talent, resources, curiosity coming into the sector. And I guess we find ways to coexist, right? So I'm guilty as charged, rattling the cage very early on, saying we don't need an insurance partner, we got to do it all ourselves. And the response was, you have to hold a lot of capital, which nobody would give me in the right mind at that early stage, right? So you find ways to work together. We are working with Zurich. We're incredibly happy and lucky that we found a strong partner to take certain parts of the value chain, and others we are good at. The distribution, for instance, the claims handling sits with us. So it's interesting to see how these propositions are shaping out. And yeah, it's again a way to coexist and find ways, in different ways potentially, to work together.
Great, thank you for that. So perhaps also to just touch on what key technological trends and business models that you're observing and building your eye on as you're respectively building businesses in this space. What's standing out to you?
I think machine learning as one subset of AI is going to touch every single industry. But in insurance, it's just amazing the kind of progress that's already been made on claims handling, on analytics, on lead scoring, on finding new customers. You can use machine learning to create an amazing uplift for an insurance company, for a broker, for a reinsurer. but very few insurers are able to invest in it, get the talent to their own organizations. So they turn to startups in order for them to do the R&D for them, frankly, which is a good situation to do. We get to do all the crazy ideas. We take the ones that work and give them to insurance companies, and the ones that won't work, nobody gets to be embarrassed by, except for me. I have to tell my investors why things didn't work out. But by doing all of that in the same framework, we are able to take the best of innovation, the best of machine learning, and give it to the industry. But that's from a B2B perspective. I guess it's very different in the B2C world, Toby.
Yeah, absolutely. So I think it's partially the tech side of things, but I think it's more the different propositions popping up. I mentioned our business model, how we identified a problem with the very core insurance business model, so to speak, and we believe we need to fix the root cause for that. However, there are a lot of other cool propositions out there I really, really like. You know, if you think about it, it just makes sense that you pay car insurance by hour or by mile or temporary, right? So why do you need to pay an annual premium upfront and even pay some interest fees on top because you dare to pay monthly if you decide to do so? I think there's a lot of friction in the system, and I think, again, a lot of niche products occur, and again, the customer has more choice, which is really, really cool to see.
Great. So now I'm going to push you a little to actually start naming some of the new entrants that you believe have scope or even the potential to disrupt the market as we currently know it. Who are you keeping your eye on, or who are you rooting for?
You know, it's a bit cheeky, but I think from my side, I think it's really everyone who helps drive the mission of increasing even more attention with in the InsurTech space, attracting new resources, establishing InsurTech as a thing. I think inevitably it increases pressure on venture capital funds to put more focus on that sector. Insurers will be asked more and more by their shareholders, so what do you do in the innovation side of things? That will lead to more heads of innovation roles being created to figure out how can we work with startups, right? And I'm happy to share a few anecdotes, right? So we're working with an incumbent, and we had problems that, you know, you would think there shouldn't be any problems. It took us, at one instance, 2 weeks to figure out who on earth was available to sign off or allowed to sign off on a very small change in our proposition on their underwriting side of things. So we are asking questions nobody has dared to ask, and nobody was stupid enough to ask. And I think we are the guinea pig in certain areas, in certain ways, and I think the next startup will come in has a much, much easier way in that regard.
Sure.
So again, it's less so than making a bet what startup will survive and who will become the 10x company.
Yeah.
And I think it's a collective approach and effort to establish InsurTech. That's really cool to see. Startups like Eric and others we know very well. We exchange thoughts, opinions, help each other out.
Sure.
And I think it's such a large market in the UK and beyond. I don't think there's any key competitor or key startup for me. It's a collective effort.
I really feel that way. It's a very collaborative environment. We all help each other out. We do mentoring, reverse mentoring. And then you get to see how much a strong team matters for startup success. There have been many cases where we've seen an InsurTech startup with an okay idea. Yeah, maybe this could work. But with a strong team, we're able to take it to the next level. So just to mention a few examples,
Sure.
Fabric and Ladder on the life insurance side, coming from nothing to millions of premium very, very quickly.
Yeah.
Chong'an went from 0 to 2 billion customers paid policies sold in the first 18 months, and then IPO'd on the Hong Kong Stock Exchange, valued at, I think, $8 billion USD now. It's just crazy how fast it moved. We have Bought by Many here in the UK, who've been using social media data and search data, and just picked up a £50 million Series B. Roost doing similar things around leak detection and figuring out how to have a smart home, have also been doing amazing things, and Roll is running it in a very good way. So it's a very interesting environment. I tend to feel like we're all athletes. We're trying to compete alongside each other. We never look at each other as competitors, except for in the World Cup, where now both our countries, Sweden and Germany, has been kicked out. So I'm pretty upset about it, but let's hope that it's coming home to England, right?
Certainly.
I thought I heard all the jokes already in that regard, but one more. And I think one thing to add, the companies who have raised larger rounds, the Series A, B, are also tremendously helpful for us. They're creating a market and awareness. We've just completed a seed round similar to Eric, and We were asked by one investor, is there evidence of a larger rounds in industry taking place, right? You need to have your pioneers, you need someone paving the way, and you can comfortably point towards the Allianz Bimas, for instance, the Lemonades of this world, saying, yes, it's possible, if, a big if, of course, but it's much, much easier to convince an investor that it happens if there's no precedent whatsoever.
Do you think the potential to disrupt the industry will always be linked to an incumbent being involved in some form or other, as we've kind of seen to date? Or do you think there's potential, maybe 3 years down the line, for a lot of the startups that you've referenced to have grown to an extent where it's possible for those parties to perhaps collaborate and actually build this 10x business?
You're kind of picking your difficulty. So no matter what startup you're starting, you're going to have something that's hard to do. So for us, it's how to sell into big organizations like insurance companies. Toby, I imagine it's acquiring customers, like B2C model. And if you're also then adding the difficulty of getting the regulation right, Zenefits tried to do it. They had a few $100 million in funding in the US, but they couldn't get the regulation to work, and were also cheating on some instances, which is a horrible thing to do. So that didn't work out. I think there are some startups like Lemonade, Trove, and others who would have the capacity to do it. Probably also WeFox, One here in Europe. The question is, do they want to? Do you create so much of a benefit by running on your own? Or is it better, like you've done, Toby, to actually partner up with a strong strategic partner, and you also receive some strategic investment, right? So then you're picking that route, and that allows you to just run faster. It's the old cliche, right? If you want to go fast, you go alone, but if you want to go far, you should go together. And that's the way that we're both running it.
Nice. There's obviously two sides to the coin. The one thing is, yes, be pragmatic and make it work and go to the way of the least friction. Of course, we have a lot of discussions around capital requirements and insurance. Is it necessary? Is it not necessary? When we started out, you may remember we charge in arrears, so we invert the cash flow, so to speak. There is no premium income anymore upfront. We charge later on. So we actually went into the regulator and told them, we are a consumer finance company, right? We're not insurance. We are lending out money and collect it back from the community. And our application to the sandbox read very, very funny, right? If you have a claim, you have to apply for a loan from the community and you have to collectively pay it back. And the verdict was, unfortunately, it smells like insurance, it has to be insurance. So, there's a starting point. We could then now try to raise money with that result and then knock at the door saying, but I want to, or we just be very pragmatic, bring it to market. We can test how the customers react. We have still tons to learn on how we sell our proposition. Last week, someone called us a con on Facebook because he said, I can't believe that actually can work. And I explained to him how it worked, and he became a customer, right? But it's this kind of horse carriage car thing, and I think it's very, very early on to kind of say this is the way forward, but I believe it is. And there are different ways. Well, if you try to squeeze innovation into a square peg hole, for instance, you lose some left and right eventually. So the question is, how can we protect the customer? How can we make sure there is sufficient protection left and right, whilst not choking off innovation in the first place? And that's an interesting learning process, I guess, not just for us as a startup, but for the regulator who's very open and willing to learn, which is really great to see, but also the insurance companies left and right.
I think that's really a key point. We're all here to protect more people, protect more businesses. And we then have to ask, is the current industry doing a good enough job at doing that? And unfortunately, no, they're not. Not at the right price point, not to enough people. Among micro SMEs, so small businesses with less than 10 employees, 1 in 3 don't have any insurance at all, even the ones that are legally mandatory. And that's just a failure, frankly, on behalf of the industry that we're all part of. So we need to do it much better. We need to get much, much better to distribute. And many of the innovative ways we're discussing here will be ways to do so.
Great. So one last question, and hopefully we get your responses quick enough, is around whether anyone else is better placed to insure. So, many people would quote the tech giants. Google gave it a shot. Amazon seems to be putting something together. Quick thoughts in that regard?
On Google specifically, I met a person from there who had been working in a team, and they said that they did a pretty good comparison site. So you could search on Google for the term home insurance. They would immediately give you a quote, and then you could buy. So Google actually started selling insurance from it. The problem was that they then didn't get the advertising revenue that they would have received from AXA and Aviva and Allianz, all bidding against each other and being able to sell home insurance over an advertising basis. So the money they lost on the advertising, just forgoing the revenue, it was so big that they didn't make up for it by selling insurance directly. So that's an example kind of innovator's dilemma, where you're so ingrained in the existing ecosystem that you can't disrupt. So the advertising platforms, Facebook, Google, and others, I think they're all in that same situation. Amazon, maybe, because they can look at Alibaba, Chong'an as an example on how to do it. But I think potentially any of the bigger healthcare providers and the broader ones, like we see the join up now with Alibaba and Berkshire Hathaway, those are really interesting to look at, see if the real giants of the world can go in and disrupt insurance.
I guess we covered most of it, or if not all of it. I personally believe there are certain things you're really, really good at and you should focus on, call it e-commerce, for instance, and then partner up, tie up with other companies to fill certain gaps. I think Amazon is doing that in India now, investing some money and working with existing startups alongside. Of course, for me as a distribution startup, I would love to tie up with some of them. It's really appealing and interesting. We need to do some homework first, but it's a really interesting place to collaborate again.
Sure. And now we'll open up the stage to the floor to provide some questions.
Okay, ladies and gentlemen, we've got 2 microphones here. So if you want to have a question, please put your hand up and one of the microphones will come to you. There's one here.
Hello, good morning. I was a bit late. I don't know if I'm asking something you've already discussed about, but I am aware of a partnership between AXA and ING in order to launch a joint, let's say, that's what they say anyway, next generation InsurTech, Fintech platform. Do you think these, well, let's say ING was a bit disruptive at its time, but they are now, it's now a legacy institute, financial institution, so to speak. So do you think that these kind of initiatives could be really disruptive?
If I look at all the major European banks, ING personally is probably the one that's been coming furthest on the fintech journey, mainly because of Yolt. Has anybody used the Yolt app in here? So if you haven't, do check it out. It's really cool. It's built by ING specifically. So it's pretty interesting that AXA picked them as a partner. You should remember that in 2014, AXA also signed a partnership with Facebook, but it didn't come anywhere. They really never got to a distribution channel over Facebook, probably for the reasons we discussed before around privacy and locked-in existing advertising channels. So this is interesting, but it could also end up being, frankly, a bank assurance on steroids, if you will, and that could be a way for them to go out and get some extra distribution. True 10x disruption, I think, will have to come from deeper data sets, machine learning, and some of the disruptive technologies that we've been discussing today.
Thank you. We've got a question over there and we'll have time for one more if anyone wants to put their hand up.
Hi. I, by sheer probability, am working right now with the insurance sector. Quick question to Tobias. Is the aim of your firm basically be the next Monzo, but for the insurance sector? And also your thoughts about, I think you've been, I don't know if you mentioned something about Chong'an or Ping An, which is like a huge disruptor in the insurance sector for China, but I think they're facing quite some difficulties right now. But yeah, just your thoughts. Thank you.
I'll take the first part of the question. Of course, we'd love to be associated with a cool company like Monzo. If you see people tapping in with their pinkish coral card, it's amazing what they have accomplished in that regard. Not a commodity anymore. And yes, we also have a similar, very bold color scheme, Hawaiian raspberry, we call it, of course. And yeah, so we are aiming to become a lifestyle proposition, a lifestyle insurer. So at the moment we do cover for bikes, but it will move beyond to cover your favorite sports and activities. And yeah, thank you. It's great to be associated with this in the same sentence with Monzo.
Down here, please.
GDPR, good or bad news for your business?
Good news for the customer, therefore good news for business, because we're here to care about the customer. What GDPR specifically will do will be to create a level playing field so that everybody knows what rules are out there. In e-commerce, contrastingly, I think it will create a bit more locked-in effects because the e-commerce giants, Amazon and others, who had time to build up big mailing lists before GDPR, now have a built-in advantage compared to new entrants who are trying to go in and get more user base and sign-ups for mailing lists and so on. So it'll be harder in e-commerce. In insurance, in others, I think it's good for the customer and therefore good for us as an industry.
So, any last words from the panel?
I would also maybe just add that it provides a clear path to compliance, right? Which I think is really great in enabling certainly the ecosystem, particularly from a startup perspective.
Sorry.
Okay, so we're going to have a big round of applause. Thank you, Tshidi, Bo-Erik and Tobias, for very fascinating